Hello, it's Thursday the 14th. I'm FxPlew and this is the market brief. So higher interest rates in the UK have contributed to falling demand. Forecast predicted the economy would shrink by 0.2% in July, but the higher rates, the poor weather and a series of strikes have all been blamed for the bigger drop of 0.5%. Jeremy Hunt defended this by pointing out that we're looking better than Germany, Italy and Spain, but the UK has been teetering on the edge of a slowdown for quite a while, and we may even be in a mild recession that has been masked by a series of one-off economic boosts. As such, there are fears growing that we could be at the start of a more serious downturn. No pressure for the MPC next week then. Over in the US, headline inflation rose as expected, driven higher by the oil price. Forecasts were for 3.3 or 3.4%, but where it came in at 3.6%, this has rather rekindled the idea the Fed may hike again next week, just to get the job done on inflation. However, the risk is that where rates are already restrictive, reacting to the oil-driven uptick in inflation could set them on a path towards recession, especially where the growth numbers would be adversely affected if 150,000 odd auto workers do indeed go ahead with plans to strike. No pressure for the Fed next week either then. It's tough at the top, isn't it? In the market, the dollar was barely affected by the inflation data. The dollar index rose marginally towards the 105 level as sterling was trimmed back to about 124.35, but we did recover to close out around 124.90 against the dollar. We kick off this morning from around 124.95 against the dollar. We're about 116.30 against the euro, and euro dollar is around 107.45 on the open. So that's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.